Hey traders, Jason Jenkins, head trader, founder, Jenkins Risk Management. I want to talk to you guys about the euro and our trading in February. We had a nice run. Still been playing this from the short side. Still bearish the euro longer term. And before we get into some of the trades, we can just talk global macro, big picture here as far as what the outlook is for the euro. Um, but we're still in a long-term downtrend for the euro. And when we go to the monthly chart, the trend, this long-term downtrend started in 2014. Let me highlight this in a different color here. So the market really rolled bearish. It began to break down here when we got started to get through 135, 132. You started to break some of these lows. You got below the 8 here on the monthly. That was showing you the start of the trend rolling over longer term. But really, it's this close here below the 30 period moving average on the monthly chart, and then taking out these lows and this monthly close, that confirmed this new downtrend. All right, so here you had a low, here we had a higher low, but breaking this low, that was what really confirmed this downtrend. And this has been the trend that's been in place for the last 3 years, going into 4 years now. So there's no change there. The levels that mattered, if we were going to continue and reverse back to a longer term uptrend, was you needed to start making higher highs at or near this 30. And this is a wave formation. I call these bands, this is called a wave formation, which is all bearish. The 30-month is descending. This is all characteristic of a long-term downtrend. So the only way you can get the euro back long-term bullish is you got to get above. You need to have some monthly closes, some weekly closes above these highs right here, 118 area. All right, and really you need a yearly closing back below this low. So you have all this up here, what we call the pie line. You have the 200 month up here. You have the upper bands. It's going to be very hard to get this market bullish longer term. So here we're just following along the 8. If we take this low out, this is a BCI on the monthly level, probably marks what we call the middle of the move. So a move at least to par or parity is in play. That's still what the monthly chart is showing us. If we look at the weekly outlook, more of the same. You can see in our model though, we like how price is failing at or near the bands here, we call the upper bands. So the market continues to make a series of lower highs, long-term lower highs. Still very bearish, right? Kind of moved into a consolidation phase for some parts of 2015, some parts of last year. But again, taking out these lows right here was very bearish. A retest here and another lower high relative to here, all bearish. So again, the call has been, you got to get me back above 109 first, then you have to get above 112, 115, this whole area before you can call for any type of meaningful rally in the euro. But 108, 109, that's still the key area for more of the intermediate term. We can see that when we go to the daily chart. But here also we've had a nice weekly down cycle, so that's helped us with February's results on the short side. And that still has some ways to go here to finish out the month. If we go to the daily chart, RSI and some of the overbought, oversold signals longer term here on the daily chart, nothing that sticks out as far as any extreme levels. The cycle this week, coming into this week, is turning back up, so maybe that does mean we can get a move back to 107 or 108. But my traders, we talked about last time we were up here at 108 to see that weekly cycle roll over, and there was a couple points in here where it had some nice trades from the short side with this daily cycle moves. Even right here last week, they had a nice little move into the low here in 105 that we covered into. Kind of tough to see. I'll show you in a little bit here on that 4-hour chart. But we take these chunks of time out in our trading when we're swing trading. These down cycles, we play these. Anyway, so this week is currently in an up cycle in the daily chart. We'll see if that kind of keeps the market sideways to, if not, somewhat bid. But again, we're better sellers, so yeah, I'm still leaning core short, but you don't want to be over your skis short here. If you can have a cycle back up into 107 to 108, you kind of got to wait and play your size back towards those levels. All right, and then when we get to the 4-hour, directionally, it was a grind up to start the year, and then we finally rolled over here beginning of February, and I liked when we started to break the bands here. This is breaking what we call our TMS, or our proprietary trend following system, these higher lows. But breaking these lows and these lows right here, that moved us to intermediate term bearish, and then you can see the bands all rolled over, and this has been a nice intermediate term down trade. So here is intermediate term uptrend within the context of the longer term downtrend, which is why we were shorting here. I mean, we were starting to build our short and picking points in here and covering. This is how you work a position. You like it short, longer term, but you got to learn to play these intermediate term pullbacks. Be patient, short, cover, and just trade around your core position. We sold into 108, but this was a nice month for us because we finally did roll over, and we were building that core short and then capitalized on the intermediate term down trade. Here's a look at some of our signals and what we do. Just a second. So came in the, you'll see in a second here in some of our trades, we came in and had some covering bids here that we took losses on, but then after that it was just all green pretty much the rest of the month. Shorted up here. I was only short 500,000, but covering into the lows, reshorted on this bounce, covered with the cycle. Had again a nice bounce, patiently waited, sold back into the rally, covered into the lows last week or 2 weeks ago. And then Friday here, we actually shorted again heavy at the top of the bands, covered into the low, just mostly on a day trade. And again, you're just testing this 106.25 area. I think the market probably can squeeze back to 106.75 or again 107. That's really where I want to have more of my size on. So I'm only leaning short about 400,000 now, and I'd like to get that up to 1 or 2 to start March. Is what it is. So we'll see. We're kind of in the middle of where I want to be more aggressive on the upside, being core short. That's pretty much what we do here, guys. In our live trading room, this is what I do as far as trading longer term, what we do with the model. It's the same process, whether we're day trading or trading the longer term daily weekly chart. So come join our team if you want to learn to trade like this, if you want to day trade, if you want to learn the model longer term, swing trade, day trade. That's just what we do. So this is just a post on direction for the euro, and then here, obviously in the blog, I'll list the results and how the trades look. So look forward to seeing you guys around, and I'll have some more updates to come on the euro and some of these other FX pairs.